All right, good morning, fellow traders, and welcome to today's live trading session. Today is April 13th, 2022. And what we're going to do is look at some high probability setups in the market. So we're going to move forward. And then after we talk about some day trading setups, we're going to talk about, fundamentals and what's happening geopolitically. I believe that's very important, especially now. So that you can get an idea of how things may look moving forward. And then after that, we're going to do some top-down analysis. But with that said, let's start with our first pair, which is the Euro Yen. And we're currently looking at the 1 hour chart. And as you can see, something is happening. What looks like may be forming right now? Let me ask you guys that question. What type of setup? Well, for starters, are we looking to buy or sell? Okay, I know Ryan, he actually answered the question, but yeah, we do see an inverted head and shoulders forming, right? We see the left shoulder head and looks like the right shoulder may want to form right now, and we want to look for an opportunity to buy. Exactly. So then we'll be looking for an opportunity to buy and for price to push to the upside. That's what we'll be looking for on this particular setup. But before we do anything, let's see if there is directional confluence. Let's see if there's multiple time frames that support a move to the upside. So then let us do this real quick because price could be shifting to the upside right now. But let's go to the 4 hour. Okay, so the 4 hour is bullish. We see the 20 simple moving average is sloping to the upside, which is exactly what we want to see in a bullish environment. So then we know the 1 hour is bullish, 4 hour is bullish, and the daily chart is bullish as well. Of course, price looks like it could be forming a double top, which is something that we need to actually look at, just to take note of that. Price could be testing these highs up here, and we just have to be on the lookout for for price to respond to this area if we do see price push up that high. So all right, so then we're looking for a buy, and what we need to do right now is find support, and we already know where support is. Support is exactly where the left shoulder is, which is where structure is. We also have this area right here, which is a hesitation candle or hidden structure. So really, support could be anywhere within this particular area right here. Let me just drag that right there. And let me just change the color for this. I'll make this well what it's been before. All right, so what we want to do is look for an opportunity to buy. But before we do that, we need to drop down to our trigger time frame, because that's where we want to execute our buy on. We want to execute our buy on that trigger time frame. So let me just put this here. I'll just keep it white for now. And what I'm going to do also, just for the sake of time, just plot a line for where our 50 is. And yeah, all right. So yeah, let's see how this is going to look. Let's drop down to our trigger time frame, which is the 15-minute. Okay, so right now we're looking at the 15-minute chart. We can see that price fell into this zone. But let me ask you a quick question. Based on what we see right now, do we see a 3-wave pullback? Yes or no? Now for this one, it's a little bit harder than what we've seen before. But remember, we want to see a 3-wave pullback. We want to see a leg A, a leg B, and a leg C. In other words, a leg A, leg B, a leg C, and then right down here, we'll look for a buy. But do we see that? That's the ultimate question. So let me see if someone, okay, I know Greg said yes. He's probably looking at this right here, this move right here. We got leg A. He probably looking like this, leg B and leg C. And yeah, that's a possibility. Um, but I'm looking at this as one big consolidation. That's how I'm viewing this. One big consolidation. So this is what I'm going to do. I'm just going to place this zone right here. And let me change the color for this. And what I'm going to do, I'm just going to wait to see how price responds around this area. If we do see price push to the upside and break above this zone, then that's when I'll look for an opportunity to buy. But I'm thinking price may correct a little bit lower into the zone. And the reason why is because if you go to the 1 hour, we're still somewhat near overbought territory. I do believe we could see price make a deeper push into this zone. So that's what I'm thinking. But we still want to do our analysis. So let me do a few things first. For starters, let me just draw out this zone to where I think price may want to go down to. So we're going to do this here. And I'm just doing this as a hypothetical as far as where do we think price may go if price does decide to push deeper in this zone. And, I'll explain the logic to this, later, especially for those who may be seeing this for the first time if they see the recording. But yeah, somewhere within this area right here is where price could potentially go. So, we'll see what happens. But what I'm going to do is keep a close eye on this. I'm going to see if price does break this zone or this area up here. If it does break to the upside, if we do see price break and close above this area, let me change the color and make this pink. If we do see price break and close above this line, then we could look for a buy on a retest. In other words, something like this. Push up, break, and close above. Come back down to retest this, and then we'll look for a buy and trade this to the upside. That's something that could very well happen. However, if price does push into this area, respect this level, and then push down deeper, and then, we'll just look for another push up, correction, and impulse. But for those who's been with us for a while, how we typically enter trades. But what we're going to do is be on the lookout for a break of this level. So let me just place our price alert and say price is crossing up once per bar close. This level right here. As soon as price breaks and closes above this level, that's when we want to be on the lookout for a potential buy setup. As of now, we're still in a bearish environment, even on the 15-minute. So, price could actually correct a little bit deeper or a little bit lower, which is what I think may happen. So, let me just do this. Let me say, but first, let me add the date. Let's say April 13th. And break and close above, look to buy on retest. All right. So yeah, that's something that we would definitely have for this particular pair. But yeah, as I said, there's a possibility we may see a deeper correction somewhere within this zone right here. So we'll see. But this is the euro yen. We're looking for a buy setup. In other words, we're expecting price to well, let me just do this from the 1 hour. We're expecting price to bounce from this area and give us a nice trade at least to these highs up here. So then that's something that we're expecting for Euro Aussie. A nice buy setup right now within this zone. And yeah, we'll see what happens. Let me delete that. All right. So yeah, we'll just see what happens, and yeah, hopefully, we'll get that opportunity to enter a buy. If not, then all is good, all is well. We'll just look for the next opportunity to take advantage of a move on this pair called the euro yen. So, are there any questions before we move forward? As a matter of fact, let me hide this um, right here, make this not visible on the daily or 1 hour. Okay, and the same with this. All right. So yeah, if there aren't any questions, then we can definitely move on and talk about our next currency pair. But yeah, I'll give you guys a second just to maybe take a look at the zone and the area. For those who may want to know the actual number as far as the zone, for this zone where it's between 136.09, or we can say 136.10 and 136.26 or 25. All right. So with that said, I guess we can move forward and we can touch on our next pair if we don't have any questions about this one. So let us go to, let's do the euro. Well, no, we're going to go back to the euro Aussie. As a matter of fact, well, let's just do that now, since that's something that we did mention in one of our emails. We can go there now. I may want to clear this chart up. I know we still have those arrows there. I don't want to confuse you guys even more. Okay, so yeah, we still have these arrows here. Let me just delete this right here. All right. As you guys know, we sent this, to you guys. We talked about this during Monday's session as far as what's going to happen, and as you can see, price did exactly what we thought it was going to do. It sold off, and it came down to this zone right here, which we identified as 4-hour structure support, and then from this area is where we expect the price to bounce higher and test the $1.46 level. But before that happens, price is going to do what we would call a double bottom. And if you wanted to, you could have got in early. You could have traded this right shoulder of this double bottom right here. I'll probably go into details of how you, well, let me just share with you how I would have went in. I know I didn't get into this setup, but usually when you want to trade the right bottom of a double bottom, you should drop down to a smaller trigger time frame. Let me just show you. So then in this case, as soon as I see this bullish candle right here, which is at 2200 hours, you can drop down to the 5-minute chart and you can look for certain price action. What we saw right here was a double bottom. Price broke to the upside, came to retest the neckline, and then we saw price continue to climb to the upside. So then that's what you typically want to see if you want to get in early and trade a right bottom of a double bottom pattern. Remember, you can take advantage of some strong moves, and that could have given you a very great reward to risk ratio. As a matter of fact, let's see. Let me go back there to the 5-minute chart and see exactly what our reward to risk ratio would be, because I know I never did this. I was actually busy when this setup happened, so I wasn't able to take advantage of it. But let's just do this. Well, let's just do this second one right here. Like if price was to go here, then we have our support, a stop loss at the lows right here. And if we go to 4,600, that's about a 4.22 reward to risk ratio, which is good. It's a very high reward to risk trade. It was something that we knew was going to happen, but like I said, at the time, I wasn't in front of the chart. So then, I wasn't really paying attention to this at the time, but I was waiting for price to eventually pull back after it broke this neckline right here. And as you guys can see, that has never happened yet. We didn't get price to break and fully test and as far as retest this neckline. What we typically want to see is a break and a firm retest, and then from there price shooting higher, and we did not see that. So then right now we're sort of in a conundrum, and the reason why is because price right now is right in that zone or testing that area that we wanted price to test in the first place. Price is testing this area right here between 1.46 and 1.4640, this zone, and right around here is where we were expecting the sellers to come in, right around here, and create a nice push to the downside. But since we have this strong kind of well, it's not really parabolic, but it's a strong impulse move to the upside, I'm thinking price may do something like this, where we get this impulse, we get another correction, and then it makes another leg up to at least retest these highs right here. That's what I'm thinking. So what I'm going to do, I'm going to prepare for another buy if we can get a nice solid correction in price. That's what I'm expecting, and that's what you should look for as well. But if we do, well, how can I put this? Well, okay. Let me just delete this. All right. So of course, we want to look for a buy, right? Now, as we've said before, we want to look for something that we like to call directional confluence. We need to see if there's multiple time frames confirming a bullish bias to the upside. So then we have the 1 hour, of course, the 20 simple moving average is sloping to the upside. We have this double bottom neckline break and this expansion higher. We're in a bullish environment on the 1 hour. Let's drop down, or let's move up to the 4 hour. 4 hour, we're somewhat in a bullish environment, but as you guys know, what's forming right now is a head and shoulders pattern, or a potential head and shoulders. So then this zone may act as strong resistance. Only time will tell. As a matter of fact, I know someone has their mic on. I don't know if you guys, if someone has their mic active or live, they can mute their mic, because I know we hear some of the background noise. But yeah, this area right here may act as resistance. So we have to be extra careful. But due to the momentum of this correction, I think we may get another push deeper into this zone before we see the sell-off. But this time frame is sort of neutral. Like, I can't really say it's bullish or bearish right now. It's sort of neutral. But let's see what the daily gives us. Okay, the daily shows us a bearish environment. The on the daily chart, price has been falling. It's been making lower lows and lower highs. So yeah, overall, we're sort of in a standstill, because 1 hour is bullish, 4 hours neutral, daily is bearish. So then we're sort of at a standstill. So then really either decision is okay. And what we're going to do is lean on the fact that we're expecting price to maybe retrace and give us another opportunity to go long. So then what we're going to do next is find a potential area where we could look for a buy setup. And we have quite a few, but the one zone I'm looking at right now is this area right here. And what do we call this area? For those who's been with us for a while, what is this candle called? For those who's been with us for a while, what do we typically call this red candle that's like an anomaly? It's sandwiched in between these green bullish candles. I'll give you guys a few seconds to chime in. Okay, yep, Rob said hesitation candle or hidden structure. Exactly. So then I'm thinking price may retrace to this area right here and then give us a nice, decent buy setup. But we never know. But what I'm going to do is look left to see if there's any structure right here that we need to pay attention to. Well, we have this area right here, which is right where our hesitation is. Candle right around there. So then let me just drop a line right around here, right? So then what we're going to assume is that somewhere within this vicinity, this zone, is where we can expect price to potentially go. Let me change the color of this one right quick, and because I don't want to be too confusing, let us draw in this new zone right here, and let me keep it like that. All right. So what I think is going to happen, I'm going to look for price to correct right down into this zone right here. In other words, look for price to give us a correction down into this zone where we have this hesitation candle in this area. And then from there, we can look for a buy on bullish confirmation. And what we can do is, for one, target the highs up here, which is probably the safest bet right now, is to target the highs. We don't have to shoot for extended targets, because right around this area, we're expecting for the sellers to come in anyways and push price down. So then this is what we're going to look to happen. We're going to look for a potential buy, right around here. And then as soon as we get that buy, and as soon as price hits this area, then we're going to expect for price to sell off and for price to do something like this. Push down, then come back, and then push lower into this area. And we could potentially even hold off for even a longer extended move. But we'll touch on that later. But yeah, this is something that we're looking at right now, is this potential buy setup on Euro Aussie, if we can get a solid retracement to take place. So hopefully we'll do that. And I think for today, I think the Aussie is really selling off. It's really weak, and the Euro has been pushing to the upside. So I do believe something like this will potentially happen. But yeah, we're just waiting for price to push down into this area, and then we'll look for the buy. But let me remove this because I don't want to confuse. No, we're looking to buy. We're looking to buy. Once price reaches this zone, we're looking to buy. And then right when price gets to this area, then we'll look for that sell opportunity to come. So yeah, let me just do this. Let me just remove this because I don't want to confuse you guys too much. We're looking to sell, of course, but before we get the sellers to come in, we're going to look for another quick buy first. And then after that, we'll look for the sellers to come in. Does that make sense? Just let me know if that makes sense. If not, then I'll try my best to cover it in more detail. But this is what I think is going to happen. I think we're going to get another opportunity to take advantage of this bullish momentum or bias on the 1 hour, but it's going to be short-lived. It's not going to last long at all. But as soon as it hits the highs, then we're going to see price possibly rotate, respect this head and shoulders on the 4 hour, and start shifting to the downside. So yeah, I think Marvin may want to say something.
Yeah. Good morning, everyone. I was just gonna sort of just briefly explain just how, like, right now we see this technical setup forming where we're looking to buy the euro versus the Australian dollar. But at some point, some of the underlying fundamental catalysts behind why this currency pair is trending in the way it's trending and why it's been sliding lower, we still got to see that play a huge role in the grand scheme of things. So then, of course, we know that the ECB is actually dragging their feet when it comes to rate hikes, whereas the Australian dollar is really being held up due to demand and hard assets. Also, the RBA is looking to, become more hawkish and hike rates as soon as they see wage growth pick up. So, due to that policy divergence, there's a possibility we will see at some point the Euro Aussie slide lower. But as for now, we're looking for this technical buy, this technical setup on the 1 hour to form. And then after that forms, and after we do get that retest, we're expecting Euro Aussie to continue its slide lower and form that head and shoulders, setup. So I just kind of wanted to, piece that in as far as we understand, fundamentally what's driving and motivating price action, but we got to pay attention to what it could do technically. Like, these support and resistance levels do matter. So, we're expecting that retest higher with the buy right now and an intraday buy trade right now. in anticipation for a deeper sell-off and more of a medium term or short to medium term sell-off in euro Australian dollar down lower to honor that head and shoulders reversal pattern.
Yeah. So yeah, we'll see what happens. For all we know, we may never get this type of setup. Price may hit these highs and continue sliding lower. We never know. But what we typically want to do, here's a tip for some of you guys. Once price reaches this area, we're going to look for distribution or consolidation anyways, prior to price falling. We're going to expect price to do something like this, maybe like a double top or head and shoulders pattern on the 1 hour chart before we see the true momentum to the downside take place. And you can see right here, the last time it hit this zone, what happened? What pattern formed the last time it hit this shoulder area on the left shoulder? Because I want to give you guys some tips on really how to do proper analysis. Because one thing that you'll oftentimes see, yeah, okay, Adam said double top. Exactly, a double top, or what we would call an M pattern. Right here, a double top or the letter M, right? So one thing you have to understand is that the market likes to leave footprints. So what has happened in the past could very well happen, in the near future within this same area. We should see topping or some sort of consolidation happening again right in this area to form the right shoulder of this head and shoulders pattern. So remember to look at these repeatable footprints. Remember, the market is always leaving clues. History always repeats itself, but not always, but oftentimes it does. In life, in these markets, history repeats itself. So, we're expecting for history to repeat even in this area as well. We're expecting for consolidation topping and then for a break to the downside. So anyways, this is the reason why I'm looking for price to come down, and then we'll look for another buy, and then for price to push up from there and test the highs, and then we could see maybe topping or whatever happen. All right, so are we cool? Do we have any questions before we move on? Remember, this is going to be a short-term buy, and we're simply going to buy, take profit at the highs, and then as you guys know, we'll be looking for price to expand lower from there. Okay, so if you don't have any questions, then we can move on to another pair. And let me see. I have quite a few on my radar. Let's do this one. Let's do Nzd Chf. Let's do that one for now. Nzd Chf. All right. Okay. Yeah, for this one, this is a strong move to the downside due to there was a policy rate decision last night for the Bank of New Zealand, the Kiwi. So that's the reason why we see the strong slide to the downside. We see extreme weakness in the Kiwi, and that's the reason why we see this fall. So what we want to do is stay on the side of that momentum to the downside. I think, yeah, Marvin, he wants to chime in and talk about what's been happening.
Yeah, well, yeah, we might as well just talk about it, right now, since you're right on the pair. But on during the Asian session, which of course, if you live in the US, that would be last night, the Reserve Bank of New Zealand did move forward and do something that we didn't quite expect. We didn't quite expect them to hike rates by 50 basis points. Now, what they had communicated prior to that was a possible 25 basis point rate hike. That's what really most of the market anticipated, because they were talking about adding COVID restrictions and different things, and we didn't think that the central bank would be that hawkish to hike rates in the midst of them talking about COVID measures and locking down and different things like that. So then we did see them hike rates by 50 basis point, which surprised markets, but also this was fresh supply as well. Well, I know it's kind of hard to see, but it spiked up. It went into this area of supply right here, and it began to fall lower. And the reason for that is due to central banks around the world. Could their hyper jawboning and hyper hawkishness, could it be backfiring in a sense where we see markets already front loading on rate hikes and pricing in higher rates due to the talk of increasing inflation. And when the announcement does come out, we're sort of underwhelmed. Markets are underwhelmed, and we see this selling off. So it's almost like a buy the rumor, sell the news type of response that we saw last night, where leading into the RBNZ meeting, the market was pricing in higher rates. We saw them buying the Kiwi, but then right after that announcement came out, then we saw an immediate selling of the Kiwi as we began to assess and say, okay, did the central bank jawbone too much? Was there this overly aggressive tone on rising rate expectations, which is really backfiring when it comes to the market's response? So then that's what why we're seeing the Kiwi sell off, because some people are wondering, like, why is the New Zealand dollar selling off there? They're actually doing a lot more. They hiked rates more than what was previously communicated. And that's pretty much because they sort of underwhelmed markets in the sense of like talking about inflation being high. We saw the market really front run on higher rates. The Reserve Bank of New Zealand began to jawbone and become increasingly or hyperly hawkish, like other central banks are, like the Fed, the Bank of Canada, which is coming out this morning as well. But because of that sort of like pricing in of a higher rates, we begin to see the Kiwi sell off right after the news. So then, yeah, but yeah, and there's also other parts dealing with it, like slowing growth from China. They export a lot of their commodities, soft commodities, to China. We know that China is experiencing a current slowdown, so then that's going to put pressure on the New Zealand economy as well. So then we have multiple factors in play, but yeah, that's the reason why we're seeing the Kiwi slide lower right now.
All right. So then what we want to do is look for an opportunity to sell this pair. So we're going to go through a few things first. For starters, we're going to see if there is directional confluence, if there's multiple time frames supporting a bias to the downside. And for what we do, we typically look at the 1 hour, the 4 hour, and the daily. So then we know the 1 hour is bearish. How's the 4 hour? 4 hours definitely looking bearish, is pretty obvious. And the daily is looking bearish as well. So then we definitely have directional confluence, biases to the downside. We want to definitely stay on the side of selling when it comes to this pair. So now that we know that we want to sell, the next question is, where do we sell at? That's the next question we should be asking ourselves. Well, we already know we want to sell at resistance, buy at support, right? That's a mantra. That's a saying that you should rehearse in your mind over and over again. Buy at support, sell at resistance. We don't want to do anything but respond or execute trades around those critical areas of value, like support and resistance. So then what we want to do is identify where resistance is. And what we can see is that right around here, we have what you would consider to be an area of consolidation. You could say a zone of consolidation right here. So what I want to do is place a line. I'm going to place two lines. I'm going to place one right here at the half million mark and another one. Well, I think we're good right here. I could just draw this in. We're just going to draw in this zone from the low all the way up to this area right here, which is around 63.56. Let's do 4 pips above that. Let's do 63.60 just to stay with the whole numbers. All right, so 63.60. So then somewhere within this zone is where I think the sellers would come if we do see price retrace. Also, something we could do as well is drop down to the 15-minute. Let's see if we see any hidden structure in this move to the downside. And We don't really, we do see price, hesitating or pausing, right around this section. But for the most part, we don't really see much. We do see sort of like an indecision candle right around here with this doji candle. So then that's something to take note of. But for the most part, we're looking for a sell if price could retrace up to this particular area right here. So, we'll see. We may not get that retracement, but if we do, we'll be looking to sell as soon as price reaches this area. And let me just do a few things also, because let me do this right here just to be conservative. And we're not going to really shoot for strongly extended targets, because as you guys know, the market moves harmonically. We're not going to assume that we're going to get a measured move to the downside, like something like this. I think we may see something like what we have right here, which is interesting, because right around here we have what you would consider to be a what? Let me just place this line right here. What do we call this particular level? I don't know if you guys can see it on your end or on the screen, but it's 0.6300. What do we call those levels? 0.6300. What type of level is that? I'll give you guys a few seconds to chime in. Yep, Stuart said psychological level. Exactly. It's a psychological level. It's a banking level. It's what you would call an institutional level. Remember, these round number, whole number levels are what you would call institutional levels. So then, what we would want to do is definitely exit our trade before it gets to this area. So if we do see price retrace to the upside, then we can definitely look for a sell somewhere within this zone. Right here, we'll look to sell, and a potential target area could be, somewhere within this area. Let me just draw out this zone right here. Let's just say a potential target could be somewhere around there. Let me do that. Right, that could be a potential target. So yeah, we'll look to sell if we can get a pullback to this zone or to this area. If we don't see it, then we'll just go to the drawing board again and try to do our analysis again to see what is really happening in the market. But what we do know for certain is that there's definitely bearish momentum, and we want to stay on that side of the market. We don't want to fight against momentum. We want to wait for price to retrace, come to us, because remember, we don't want to jump on a moving train. We want price to come to us, and then from there we make a decision on whether or not we should execute. So yeah, this is Kiwi Swiss franc, and we're looking to sell. Are there any questions before we move forward? Going once, going twice. Okay, let's go back to that euro yen. Let's see how that's looking, and then we'll transition from there. Let's go to euro yen, see how that's looking for now. Okay, let's go to the 15-minute chart, and yeah, it looks like it's consolidating right around here. Remember, we'll see how this goes. I think we'll have a better idea of what's going to happen maybe towards the end of this webinar, but we may be able to execute a trade, live today while we're on this webinar. So then that's the good news. But price has to do exactly what we needed to do in order to confirm that we're in a bullish environment and that momentum is pushing to the upside. So then we're going to wait for that confirmation. All right. So with that said, I guess we can move on. Let me okay, let me see. Do I want to do another one? Okay. Well, if I do something, I'll make this one real quick. I'm not gonna take too much of your time. Pound Aussie. I'm not even gonna explain this one, but Pound Aussie is another one. We'll be looking to buy on a pullback in price. A pullback where? Well, we see hesitation right here. So this zone, this area right here is where we would look for price to, pull back to. So again, we're in a bullish environment, wait for price to pull back into this zone right here, and then look for a buy on bullish confirmation and target these highs right here. But this is another opportunity you could look at as well. These are what we call momentum setups. What you typically do is just stay on the side of momentum, but simply wait for the correction to an area of support and then get in. It's very simple. So that's what we're going to look for in this particular pair as far as British pound, against the Aussie dollar. So pound Aussie. Wait for a correction to the zone. Look for a buy. All right. So with that said, I guess we could move forward. I'm going to pass the mic over to Marvin, and he's going to talk about what's been happening in the market, and then from there we'll do some top-down analysis. All right.
Yeah, so yeah, I'm going to do my best to sort of explain what's been going on as far as fundamentally, but we just did have a set of announcements come out in regards to producer price index. On yesterday, we had the CPI data come out of the U.S. and we saw that the CPI data it didn't renew or how can I put it? Like we saw a softening and a weakening when it came to core inflation on the CPI side. It didn't quite, meet expectations. So we didn't see that type of inflation that was sort of drummed up by central banks, by economists around the world. So then, it kind of disappointed, I wouldn't say really disappointed because really it led to the bounce in equities. We begin to see a rotation back into our big tech growth based stocks. A lot of our the QQQ, the ETF for the Nasdaq benefited off of that announcement. But that was on yesterday where we did see inflation, and of course inflation is at 30 to 40-year highs. But on the core side, we didn't quite see the follow through of that strong inflation and what has been sort of spoken about for the past few weeks. But for today, let's look at PPI. So then let's do this. Okay, I'm going to go to investing.com right quick because there's a lot to discuss today. Fundamentally, even when it comes to earnings season, because we're going to have a slew of banking and financial institutions release their earnings data. And the first was JP Morgan, which we may touch on because that's pretty much providing some level of I wouldn't say uncertainty, but right now we're seeing stock markets sort of pare back some of its gains due to what came out earlier with the JP Morgan earnings falling short. Their revenue wasn't as solid as what they have previously projected. So then we may talk about that in a little bit, but let's go to the economic calendar right here. And let's scroll down to see what's going on. And as you can see, we had a slew of inflation data, PPI data, coming out. And you guys got to keep in mind that this is a shortened holiday week. So a lot of these data prints are being crammed into a already short week. So some of this data would have been released on Friday or Thursday, but they had to do everything before then because markets are going to be closed on Good Friday in celebration of the Easter season. But yeah, let me just scroll down. We see that we had a slew of inflation data, but let's go to PPI. And as you can see right here on the headline figure, both on a month-to-month basis and year-over-year basis, we see that inflation is picking up. So then one thing we do know is that on the supply side, with manufacturing, with companies, they're seeing the cost of goods and inputs increase to the upside. So then typically what we want to see this handover of this inflation into the CPI. And we got it to a certain degree, but we didn't get it. So then, of course, this is pretty interesting that right now the PPI data is showing that there is inflation. We see that the headline figure came out at 11.2, which was much higher than which is like a percentage point higher than what was anticipated. We see the month to month came out at 1.4, but even with the core, we see core inflation on a year-to-year basis that excludes food and energy. That came out at 9.2% when the forecast was 8.4%. So then, this data print should definitely boost expectations of higher rates. It should feed into the rate hiking scenario, the rate hiking plans of the Fed. And we should see that even in the 2 year. Let me just go right quick to our chart and let me just look at US 2 year yields, because that's where we like to see that risk premium being priced in. We like to see it being priced in on 2 year debt. And it's interesting. We saw, it spike a little, but now it's pulling back and sliding lower. We're seeing the U.S. 2 year slide lower. Let's go to the U.S. right here, U.S. 10 year. See what that's doing, and we're kind of seeing the same where we saw, it spiked, but now it seems as if it's softening. Which is really interesting. Because if that's the case, then we're seeing sort of what we saw on yesterday, feedback into the market, where we're seeing this drop in inflation expectations and lower, which will pretty much translate into possibly lower interest rate hike expectations, since the Fed and other central banks may not have to hike rates as aggressively as they may have communicated in past times. Because what we do know, and this is going to be a lot to cover, but let me just do this right quick. Because what has really been concerning markets is what we've been seeing with rising real yields. Real yields have been rising to the upside, and right now we're looking at the 10 year nominal yields. This is the U.S. 10 year debt, but this is nominal yields, which means that the current yield of premium or rate that we see here is the rate, with inflation priced in. So then, of course, this is not the real rate for the 10 year bond that takes or that accounts for inflation. This is sort of just the nominal yield. But when we look at real yields, let me just go to that, and I'm just going to go to a derivation of it, because right now, um, let's see, let's go down right here, and we're just gonna do. But there's two of them that I can do, but I want to do this one. This is okay. Well, let me see. Let's go to the daily chart right here. Okay. So yeah. So then right here, this is the U.S. 10 year. This is pretty much a chart that's sort of similar to real yields. It's not quite exactly the rates, but it's really, really close to where real yields would typically be. This is, the equation. We got the 10 year nominal yield minus the 10 year break evens. And that's going to give us, which is inflation expectations. So we're seeing the nominal rate minus inflation expectations to really get the real yield. So then we see right here that the real yields have been climbing for the past few trading sessions, and it's almost near this 0% or positive territory, which of course has caused markets to sort of take into consideration what positive yields would mean. But we see that it was moving up. It did pull back some on the news that just came out, but this is the daily candlestick right now. So then it was high, but of course it pulled back on the news. And let's see if we can see the same thing even on the 5 year. This is the 5 year. We can sort of see the same thing right here, where real yields are starting to soften and slide lower. So this should definitely underpin commodities, especially gold. You know, so pretty much what I want to point out here is that right now we're seeing signs that you know inflation could be topping. That there's a possibility that inflation could be peaking, and if so, then what would this mean for the Feds and other central banks' aggressive tightening. So then right now we're seeing markets sort of fairly mixed. Let's see what's happening with the yield curve real quick. See what's going on there. And we can see that for the yield curve, we see that it's continuing to steepen, move out of positive or negative territory. We see the yield spread widening, which is really good. This is the US 10-year or US 2-year to 10-year yield curve. So then we see that it's widening. And what was interesting is that one of the other yield curves, the 5-year, 10-year, right here, that actually just broke out above and began to widen as well. So then the US 10-year, 2-year curve, and also the 10-year, 5-year curves, those were pretty much the only yield curve segments that was really gave a sign of recession or was really in negative territory. But right now we're seeing, that both of these yield curves have moved back into positive territory. They're starting to steepen. The spreads are beginning to widen. So then, of course, could this be due to right now, you know, because it seems as if right now there's this focus away from hikes. Like right now, the market could be saying, okay, did we overtalk rate hikes? Did we pretty much jawbone and hyper, how can I say it, cause the market to load on rate on the shorter end, but ignore the longer duration premium. So then right now we're seeing that even with balance sheet reduction and all of that, that really focuses on the longer end of the yield curve, that is sort of helping to prop up longer dated securities as we begin to see the market or see the central banks prepare to sell longer dated securities on their balance sheet. So then this is what's propping up, sort of like the yield curve right now, where we see the spread between the 10-year and 2-year, and also the 10-year and 5-year widening and widen in favor of the longer dated bond or the longer dated security. So then we're seeing, just this interesting, play. But there's a lot going on. I know sometimes it can be complex, but there's a lot going on in the markets. I know everyone's talking about pending slowdown, or really, we're kind of seeing the signs of slowing growth, especially in China with their lockdowns. So then some people believe, or really some analysts are expecting us to see um, some type of contagion, some type of passing over of that slowing growth into other economies, especially those that export their goods to China, like Europe, like Australia with copper and base metals, iron ore. These economies export much of their goods, and a lot of their export revenue comes from China. So if there's a slowdown in China, then there's definitely going to be some type of contagion effect across the board. And actually we can see this even if we look at the FXI. That's the large cap ETF for Chinese companies. And as you can see right here, we begin to see the FXI. It's been selling off, but it looks like it may possibly want to break lower. Now we got to keep in mind that this opens in about 30 minutes, and the pre-market price is a little bit higher, so we could see it move to the upside, and there's a reason for that. But we can also look at what's happening with the hunks, like the, let me see that. Let's see, HSI, Hang Seng Index. Right here, we could see right here that it closed in positive territory for the day. Let's go to the Shanghai Composite here, and we see that the Shanghai Composite closed lower. So then we really got to look at some of these Chinese indices, and I think, let me see, what is another one? I can't remember, all of the Chinese indices, but let's see, Shenzhen right here, which is also an area that's experiencing lockdown. So we saw that in both the Shanghai Composite and the Shenzhen component index. that we see that they close negative for today. So there's a possibility that when we see the FXI open, that we'll see that continue to slide lower as well. It may gap to the upside, but it may continue to slide lower as we begin to hear more headlines come out about shortages of food, shortages of just a lot going on there with the slowdown, with the lockdown. That's going to eventually slow growth in their economy. So then this is what's pretty much going to impact the rest of the world. This lingers on. You remember, there's a common phrase or saying that we used to say, if when the red dragon sneezes, the rest of the world catches a cold. So then we see that China, the red dragon, they're getting ready to sneeze. There's certain signs of them possibly have already caught the cold, and they're getting ready to pass that cold and infect other nations, especially neighboring nations that are trade partners or do business with China. So then this is what's going to weigh on global growth as a whole, and it's going to weigh on risk assets. But but what's been benefiting, um, what's been helping to prop up, I should say, Chinese stocks has been pretty much what they have been pretty much convincing and bullying many of their large shareholders to do. So then right here, we see this headline: Chinese regulators call on institutional investors to play a bigger role. So then what they're doing, the PROC, the People's Republic of China, the government, they're sort of I don't want to use the word bullying, but they're kind of saying to some of their largest investors, those that own huge funds, investment funds, they're trying to encourage them to buy more Chinese shares, buy shares of Chinese stock to help these companies weather through this bad, season of slowing growth. So then, that's what they're doing. So then they're kind of forcing them. They're saying you have no other choice. We want all of you wealthy, some of the largest shareholders in some of these companies. We want you guys to buy some of these weakening stocks to help prop up the market. So then that's what's been pretty much providing some level of support for Chinese risk assets. But yeah, for today, it's kind of hard to kind of get an idea of what the risk sentiment is. It's like kind of mixed for today, because now we're seeing a paring back of some of the gains from earlier. Like if we look at this futures heat map, a lot of our U.S. indices were in positive territory. Our U.S. equity futures indices were in positive territory, but we're seeing them pull back into their opening ranges. Like we see the Dow is like in negative territory right now. And, of course, this is, interesting because, we're seeing the VIX, slide lower. And normally that underpins, US, risk assets, but we're seeing things change as we move closer towards the Wall Street open. And I think with the JP Morgan earnings data release, that has caused some level of caution, where we're going to see traders that carried a little bit more speculative, interest in some of these risk oriented assets. They're beginning to scale back some as we begin to hear more of the earnings data come out. Because for today, I think we have the banking data, and I think on tomorrow, Bank of America comes out. But we have a slew of banking data that's coming out, and if it's true that there was a drop in revenue due to a drop in investment banking activity from the onslaught or the onset of the war in Ukraine, then that's going to be interesting to see how markets sort of look at that. But as you can see, oil is picking up. We see crude oil futures moving to the upside. We see gold fairly supported, just like I said. Like we're seeing a pullback in real yields, so then that's going to support our precious metals. But we see copper, Dr. Copper, selling off. So that's pretty much interesting. That's typically an indicator that we can use when it comes to industrial activity, because copper goes into a lot of manufacturing. It's an industrial base metal. So if there's a drop in copper, then sometimes that can indicate that there's a drop in industrial activity or manufacturing, which we know in China there is a slowdown. They're in lockdown, so we know that manufacturing activity is slowing down there, and it's already at a 2-year low in China. So it's going to be interesting to see how this pans out in the next few weeks. But we see Dr. Russell still holding on to positive gains. We see, let's see what else we got. Okay, we see lumber selling off. Um, but yeah, it seems like for today, markets are fairly mixed. And it seems as if the market wants to remain cautious ahead of the Easter weekend. So then it seems as if right now we're not getting any signs or clues that we're going to see that Easter, Easter rally. Because usually we'll see this Easter rally in April to help in closing out the month. Because traditionally and seasonally, the month of April is a month where we see stock markets rally and we see this risk appetite. We see a huge level of buying in April, and then we sell in May and go away in anticipation of the summer months and the summer volatility kicking in. So then it seems as if we may not see that. And this, and we do have those years where it is an anomaly. I know this year is one of those years where we didn't quite see a lot of the traditional seasonal patterns play out the way that, most analysts and investors and traders expected, or because it's a seasonal trend that happens where we see stocks rally during certain months of the year, but we're not seeing that this year. This year is an anomaly. There's a lot going on. We're in this period of stagflation where we're seeing signs of slowing growth, but also rising or peaking inflation. So it's going to be interesting to see how central banks navigate this season, because this is the hardest situation to be in, where you have to raise rates to kind of help curb inflation, but you also don't want to do it at such a pace where it helps to actually hasten recession and bring a deeper slowdown in the economy. So then that's pretty much the conundrum that central banks are in right now. So yeah, we're going to see some volatility for the next few weeks as we try to weather this season and this cycle that we're in. But right now we're looking at the Forex heat map, and you can see that mixed tone play out here, where some of our strongest currency is now the pound. It used to be the euro. The euro was the strongest currency, but that has since fallen back. But now we see the pound, the US dollar, and the euro sort of neutral, but they're more of the stronger currencies for today. Whereas the Kiwi, let me just try to move this out of the way. Whereas the Kiwi, the Aussie, the Australian dollar, and the Japanese yen are the weakest currencies for today. The Kiwi, these commodity linked currencies that are strongly tied to Chinese growth. We can even trade the Aussie as a proxy for the Chinese yuan. We see that both of these currencies are selling off in that part of the world. These are our antipodean currencies that are strongly tied to Asian markets. But we see that they're weaker for now. There are commodity linked currencies. So that's pretty interesting that we're seeing a lot of our commodity linked currencies, even the CAD, weaken and sell off. And yeah, that's pretty interesting. But it's kind of hard to say what the sentiment is. We're in the midst of a rotation right now. But this is Bitcoin. You can see that this heat map is mixed as well. This is the cryptocurrency markets, and you can see that Bitcoin Cash and Litecoin are leading the rally for today. Even though it's pretty balanced across the major cryptocurrencies, we see Ripple and Ethereum sell off. So yeah, so I don't know what to say. Today is a pretty interesting day. Just look at what you see, pay attention to technical signals, and I would just say exercise patience and sort of wait for confirmation to play out. Like, don't just pull the trigger immediately on some of your trades. Wait for the market to confirm to you that it's definitely going to move in a certain direction. Even though we don't know, we're trading random price action. We don't have a crystal ball where we know where these prices are going to go, but we're going to estimate. We're going to make a calculated guess, a decision based on our analysis on where these prices will go. So then I would just recommend just pay attention to the technicals, wait for confirmation to execute these trades, because right now it seems as if a lot of this data is coming in mixed, and I don't know what else to tell you. Like, yeah, but let's scroll down and see what's coming up. We got the Bank of Canada, a monetary policy meeting coming up. That's coming up right on the heels of last night's R&B our Reserve Bank of New Zealand monetary policy report, and we're expecting them to hike rates by 50 basis points. So it's going to be interesting if we're going to see a similar type of response there, where we'll see a spike upon the announcement, but then we'll see it pare back all of the gains that it had from the announcement. So then we may get that, but that comes out in 50 minutes, and then we have crude oil inventories, our weekly inventories coming out as well, that we're going to pay attention to. But for the most part, that's it. We may see volume and volatility start slowly um dipping and withdrawing from the market as we move closer to the long holiday weekend. So yeah, but yeah, that's pretty much it. I don't really have much to share. I'm just gonna really, pass the mic back over to Melvin, and he's just going to continue with the top-down analysis for today.
All right, guys. Okay, so then what we're going to do right now is look for some more trading opportunities, some more setups in the market. And bear with me, guys. I know my mind isn't right. I really didn't get any sleep. Pretty much stayed up the whole night. Really didn't get any rest at all. So um, I'm running on fumes, but I'm going to do the best I can to make sure that you guys get something out of today, and that you know how to move forward, um, especially for this week. But seeing that is the case, as a matter of fact, well, let's do this. I'm going to go to a particular pair first, or well, yeah, let me go to this particular pair first, and then we may touch on something that can help you make a decision on what you should do. So what I'm going to do right now, I'm going to go to US Dollar Cad. Now, as you guys know, we do have a Bank of Canada interest rate announcement coming out soon. So then, we definitely have to, be aware of that. But all right. So then this is on the weekly chart. On the weekly chart, we can see here that price is really trapped in this consolidation for a while. We see that there's, highs up here. This is resistance, and down here we have price testing an area of support. So then, we've been seeing this, this range bound activity for really, really weeks, really ever since last year. The middle of last year, price has been maintaining this range. And, we could see price continue to push higher, but the only way we can know for certain what's going to happen in the short term is if we drop down and go to the smaller time frames. What we want to do is look at things from a top-down perspective, like the weekly, then work our way down to the daily, and then to the 4 hour, and then to the 1 hour, etc. You guys get the point. We need to get a bird's eye view of what's really going on. So then now we know that the US dollar, Canadian dollar has been maintaining this range, has been trapped, and we could be seeing price push to the upside over the next few weeks, but we may not see it. Who knows? But anyways, let's move on. Let's go down to the daily. Okay, so right now we're looking at the daily chart, and what we can clearly see here, let me remove this because we don't really need this stuff right here. We can see that price definitely broke and closed above this structure area. Look left, structure leaves clues. You can see that this was a key area of structure. Price broke and closed above it, which should tell you something. But if you look at price right now, for one, there's a few things I want to touch on. For starters, we see that we have what you would consider to be an institutional level right around this area. Let me move that up. So $1.27 level, that's an institutional level. And if you look, we can also see that there is some minor structure, in this area as well, even on the daily chart. So then, right around here, we see the potential of, price, how can I say, responding to this area. It could respond for a quick dip just to push up again. In other words, we could see price move lower, maybe retest this structure area again, and then pop up higher and try to test the highs up here. that is something that could potentially happen, and I think it may happen. We'll see. But what we want to do from here is drop down to a smaller time frame, because what we notice is that price is testing a minor area of structure resistance. Look left, structure leaves clues. But also our slow stochastics down here is overbought, is in overbought territory. And whenever we see that, then that lets us know that, hey, there could be a temporary rotation that may happen shortly. Now, bear in mind, we do have that announcement coming out, so then we don't want to just assume that price is going to slide down lower. We have to, for one, wait for that announcement to happen, which I believe is going to happen in about 45 minutes or an hour from now. But we have to also wait for confirmation technically. So let's move down to the 4-hour. Okay, so right now we're looking at the 4-hour chart, and what we can clearly see here is that price is testing this area of supplier resistance, which is what we talked about before. And yeah, we see quite a bit happening. But let me just draw these lines and show you exactly what I'm seeing on my end. So you can see that price is creating these higher lows right here. And what I'm going to do is clone this line. And we're going to drag this all the way up to these highs right here. So then what we see is that price has created what you would call a what? What is this called? For those who may be familiar. What is this type of thing called? There's multiple names for it, but I'll let you guys answer it. Okay, yep, an ascending channel. Some people call it a rising channel, but we definitely see that happening. Now, here's a clue. Whenever you see a rising channel or an ascending channel happen right around a key area of resistance, then that lets you know that a potential bearish rotation may happen shortly. So, and the reason why is this, because what we see is a what? A dwindling of what? For those who do know. Like whenever you see price have this nice strong impulse to the upside from the origins, from this low, has this nice strong move higher, and then this move begins to weaken. It's still pushing higher, but it begins to weaken. What does that tell you? Yep, momentum is waning. Exactly. Momentum is possibly shifting or slowly and gradually reversing. So in other words, we had this nice move, but then price may come down eventually. So that is what this is telling us when we see something like that.
Yeah, because you see that, initially you had that parabolic sharp move to the upside, and you would of course expect, to see that type of momentum, that bullish conviction continue on. And it is. We're just seeing some like distribution, some consolidation, but it's moving within the channel. It's sort of grinding its way higher, which could mean that, at some point this trend, this bullish move is going to reach a point of exhaustion. It's going to, and may possibly collapse lower. So whenever you see this rising type of channel, or you see a flattening of the angle, you see how sharp it is right here, but then we begin to see the flattening of this sharp move to the upside. If the angle begins to flatten out, then that could just be an indication that this bull trend may be running out of steam, and we may see it collapse lower. But as of now, it's still a bull market. We're still gonna expect price to go up, but there's a possibility that it could collapse lower as well.
Yeah. So then how do we want to trade this? Well, right now we're testing resistance, and we don't want to really trade into resistance or trade at resistance, or buy at resistance. We typically want to buy at support, and we typically want to sell at resistance. So then right now, we're going to be looking for a sell opportunity, but we need to see a few things happen first. We need to see, but let me just draw this in right here. We need to see price break this channel to the downside, come back up to retest, and then from here, we'll look to sell. And then if you want to, you can target this area down here if you want to. However, it's up to you what you decide your target should be. But again, wait for price to break this channel to the downside and expand lower. And then we'll look for the pullback to retest this area. What was once resistance becomes, or what was once support right around here, becomes resistance. I don't know if you guys can see that. That could be somewhat difficult to see. But from there, what you want to do is enter your sell. So, you'll look for a short, and you'll pretty much just trade that to the downside. And what I typically do, I take the length and distance of this channel just to play it safe. So then in this case, I take from the high all the way down to the low of this channel. And pretty much I let that pretty much be what my target's going to be for this move to the downside. So if I was to measure this in pips, let's see, from here all the way down to here. So about maybe 60 pips is what I'll target on the way down. So, it's going to take like a day or two for this to form, and that's one thing. Trading is all about waiting for price to do exactly what you need it to do in order to be more confident in the execution of your decision, because trading is all about making decisions. But in order for us to be confident in our decision, as far as to sell at resistance, we need to see confirmation first. So then what we want to see is a break of this ascending channel to the downside and a retest before we look to sell. And, I think we could see that. Price is actually overbought now. Now, if you want to confirm that, what we can do is actually look at what is happening with the dollar or the Dixie. Let me just add a separate window right here, and let me go to the Dixie. Okay, the Dixie's right here. Let's go to the daily first. So then on the daily, we see that price is definitely expanding to the upside, and it almost gave us a measured move to the upside. If you look at this move from this low all the way up to this high, you can drag it right here. It's somewhat there, but this could be what we would call a 2-3-6 measure move. I don't want, well, yeah, let me just go through it right now. I might as well just talk about it right now. So from here, and let me add the 2-3-6 level. Let go to style. Let me add the 2-3-6 and do okay. So what you'll typically find out and notice is that price sometimes will go the length of how can I put it, about 80% of this move. So then if you put this right here, we can see that price that goes exactly where price is right now. You see that? This is what we call a 2-3-6 measure move. A 2-3-6 measure move. We'll touch on this later, especially for those who are new. So, right around this area is where we could potentially see price rotate to the downside, on this particular pair. This is on the daily chart. Now, if we drop down to the 4-hour, we see something quite similar, but not exactly the same. We definitely see price creating, a rising, well, yeah, sort of like a rising channel or higher lows right here. And but whenever you see this move, you see a nice push and then price gradually grinding its way up. That shows that things could be reversing and shifting. So, we'll see. But what you could do in order to confirm this reversal, if you do see price break through certain key areas of structure, in our case, it could be this trend line. If you see price break this trend line as well, which is very similar to what we see on the US dollar CAD, just wait for the pullback and then execute your sell on that US dollar CAD. But we can see a similar setup. We can see that price is testing resistance on the US dollar index, and we may see a rotation lower or a sell-off in the US dollar soon. It may happen. Nothing's guaranteed. All we do is forecast what we think may happen. Anything can happen, but this is what we're expecting to happen. So then you can use the Dixie also to support your trading decisions on your currency pair if you need to. All right. But let's drop down. So then, yeah, we're still waiting for this setup to happen. So if you guys want to, let me remove this. You guys could take a screenshot of this if you want. Let me remove this stuff, or we could take a screenshot or put this in a back room for you guys, or maybe send this through email. But this is something that we're looking at on the US Dollar Cad. Bear in mind, we do have that announcement, and based on what the announcement is, as far as what the Bank of Canada decides to do, that would determine whether or not this setup is something that we could look forward to. Because for all you know, we can get an announcement where it can cause the Canadian dollar to weaken significantly, and we see a huge break and expansion to the upside.
Yeah, that's
So
if they don't hike or
yeah,
they hike by 25.
yeah, that's if they don't hike or if they hike by 25 basis points. So we'll see what happens. But in the meanwhile, technically, this is what we're looking for. All right. Are there any questions before we move on to the next setup? Okay. So I'll give you guys a few seconds. I don't think we have any questions. So then let me do, well, I don't want to do cash Swiss. I know we already did that. Let's do pound yen for this one. Let's do pound yen. And for this one, for the sake of time, I'm just going to start on the daily chart of pound yen. Let's go there right now. All right. All right. So as you guys know, we entered a buy, price hit our target at 164. And this whole pair, this whole opportunity right here is pretty interesting. Let me, for one, clear this chart right now. Because it's pretty obvious price is having a hard time pushing higher, mainly due to this area of supply up here. We see the wicks, but we also know that this is an institutional level, and price has had a difficult time breaking above this 164 level this whole entire day. So something's happening, something's shifting, and something's rotating. And if you look at yesterday's candle, we have this nice red candle, but if you look at today's candle, it's pretty much maintaining almost that same range. We don't see price pushing either higher, or we don't see price pushing lower. We see more so like sideways price action, for this particular chart or candle. So that lets us know that something's happening, something's slowing down, and we could see a reversal in price soon. But before we do that, let's go down to the 4-hour. Let's see what the 4-hour is showing us. Okay, and this is what the 4-hour is showing us right now. We see that we have what? What do you think is forming right now in the 4-hour? Or could be potentially forming? Because I'm going to show you what you could do. Now, let me do this also. This is the neckline. Okay, yep, an M pattern. Greg said it. What could be forming right now, especially at these highs, is an M pattern. Very similar to what we see on the daily chart as well. Price looks like it may want to form an M pattern or a double top on the daily. Right now it's at this, right top, but price could very well come down again and form that W. So that is something that we're going to look at, and we'll see what happens. But on a 4-hour, we also see what could potentially be a double top as well, or an M pattern as well. And if that does take place, then we could definitely look for a potential opportunity to sell this until we get down to this zone or this area right here. Even though that's risky, I probably wouldn't want to hold it for that long, but then that's something that we can potentially do. But let's see. Also, we see this right here. Let me just draw on this trend line. And what we see price touching this trend line on a few occasions. Of course, right here at the origin, then right here again. This is 2, and we have another test right here. And all you need is 3 tests of a trend line in order for this trend line to be pretty reliable. So if I'm going to go short, I would rather for price to break maybe this congestion area and this trend line to the downside. So In other words, this is what we're going to look for. We're going to wait for price to push to the downside, break and clear this area to the downside. Once it does, we're simply going to wait for price to retest this structure. Look left, because structure leaves clues. What was once support or structure right here can become resistance right here. And then from there, we'll look for a sell. And if you want to, you can target the lows down here. This is an opportunity that we'll be looking for on this pair. Now, this is based on what you can see maybe tomorrow or 2 days from now. This is a setup that could very well take place. Now, what if you want to look for an opportunity now? Is there a chance to trade this now? Well, we don't know, but I guess what we could do is drop down to a smaller time frame and see if that is the case. But let me first mark this structure, and let's drop down to, let's do the 30-minute. Okay, so right now we're looking at the 30-minute, and you know, price is pushing to the downside. And you know, typically what I like to do is see consolidation patterns, you know, around resistance before I decide to get involved in the setup. And you know, especially if we're trading a right top or a right bottom. And right now we don't see that, so then I'm going to hold off on this one right here. But if we do see something like this, where price comes all the way up, test its highs again, and then come back down, then I'll look for that trade into this area. As of now, I don't see that, so I'm just going to wait for price to break this whole zone, break this trend line, and break this structure area before we decide to get involved. So again, this is on a 4-hour. Wait for a break, an expansion to the downside, pull back, then look for a sell on bearish confirmation. All right. So are there any questions about the pound yen before we move forward? You know, for all we know, price could still maintain that bullish bias on this pair. Remember, the yen has been really selling off lately. So, you know, just bear in mind that this may not happen because of that weakness in the yen. Price may continue climbing higher. And if that is the case, we can probably find, because if you go on a 1-hour chart, we see price testing structure. This is a pullback. We see price testing structure. There's a possibility we could see a continuation to the upside. That is quite possible. And remember, the pound, I believe, is one of the stronger ones for today, currencies. So then, you know, that could very well happen. So then just take note of that before you actually, you know, we could see another push up higher. That's what I'm saying. That could really, really happen. So it's up to you guys what you guys decide to do. But yeah, price could very well
plow its way
up.
Yeah. You know, like with trading, you always have to be open or acknowledge that, you know, price can move. There's many different optional, you know, alternative paths or ways price could move. Like they don't have to necessarily go along with what you may have previously hoped or anticipated. So then you have to really be fluid as a trader, where you're willing to adjust your trading strategy and trading plan to sort of align yourself with what prices are doing in real time at the moment. Because just like Mel said, it could go up. We're planning for the pound versus yen to slide lower and break those structural levels so we can get in on a sale, but we may not get that. So then you know, it's just good to be prepared in either case. Like, you know, if my first trade plan doesn't work, then I'm going to go to plan B. You know, and I'm going to do that. So then really trading is really a series of if-then statements. Like if this doesn't work, then I'll do this.
Or if this happens, then do this.
Yeah.
Like if price responds to the structure and gives confirmation, then you may want to look for a buy, you know, right around this zone, this area right here. That's an area where we could look for a potential buy and for price to push up. So yeah, these are just things that, you know, you need to know moving forward. Like nothing's, like no one has a magic 8-ball and they know exactly what's going to happen. But what we do, we make decisions based on what price gives us. We adapt. We're fluid. we change with the waves. Like if price is pushing one way and we see price responding to a certain level, and we were looking for something else, we have to be quick to pivot and change what we decide to do, what our bias is, in order to be very successful at trading. And that's what we want for you guys. We want you guys to be very successful. So yeah, but yeah, that's pretty much it, I guess, for today. That's all that I want to cover for now. Let's go to those other setups. The euro yen, I know we was looking at that. Euro yen. And let us know if you guys have any questions about anything. Okay, so price is pushing lower. Let me go to the 15-minute, see how this is looking. Yeah, price is really pushing lower. Yeah, I'm not sure how this is going to go, but I'm not too really confident in the euro yen now. We'll see what happens, but I'll let you guys know what we decide to do with euro yen. Let's do euro Aussie. Let's see how that's looking. Okay, so yeah, it looks like price pushed a little bit deeper in this area, but we see it looks like the sellers may want to come in. So we're going to definitely keep an eye on this one. But if we don't get in on this buy, at least we'll be preparing for this sell. So in either case, we'll be ready. It's a euro Aussie, and then what else we do? Kiwi Swiss franc. Okay, for the Kiwi Swiss franc, okay, price is still consolidating in this area. We're still expecting price to push up into this zone, and then I think we did pound Aussie as well. Yep, and pound Aussie looks like it still may want to push to the upside. So yeah, but I guess that's it. Are there any questions that you want to ask us?
Want to talk about gold?
Yeah, well, I guess we could. Look at gold. Let's go to the daily. Like if there's any questions or any currency pairs, any assets, any stocks, any commodities that you want us to look at, then you can definitely let us know. Okay, so right now it looks like price is breaking to the upside. We actually predicted that this would happen before, because remember we saw the consolidation a bit earlier on a smaller time frame. You go down to the 4-hour, you will see that consolidation, and I mentioned that if price pulls back to retest this line, this area, then look for a buy. And as you can see, price pushed up. So I think we're going to see price expand higher from here on out.
Yeah, I mean, we we automatically knew that it was going to go higher. I think Melvin, he's just talking about the setup. Like there was a way we could have got in early, before the breakout upon a pullback, to this, moving average or close to, where this zone was. But yeah, we would have, waited for a pullback and then executed our long. That, yeah, I mean, that would be premature, ahead of the breakout, but you could have done that. And because there's strong demand in gold, and there's multiple reasons for it. Right now we're seeing, well, just for today, well, really for the past 2 days, real yields are softening, so then that's going to underpin the gold trade. But not only that, but there's huge demand for gold across the globe. And there's this relationship now, because right now there's the gold / Russian ruble / oil type of relationship right now, where countries that are still, doing business with Russia, they're still purchasing oil from Russia. What they're doing, there's this demand for gold in order for them to convert their gold into rubles, because you remember the Russian rubles right now, Russian ruble is pegged to gold. So then they're trying to buy Russian oil by way of gold. So then that's why there's this huge demand in gold right now across the globe. We're seeing China build their gold reserves. Of course, Russia has been building their gold reserves for over a year. They've been sort of dwindling their US dollar reserves, but picking up more gold. So it's as if they've been preparing for what we see happening today, a year ahead of time. They've been actually storing up gold, buying up all the gold they can get their hands on. And yes, now it's working for them because they can peg their currency to gold.
Yeah. Also look at other mining, economies, because those mining economies are going to benefit as well. Like we talked about the Australian dollar, that's going to benefit because of gold, but also South African rand. The South African rand has been, moving. As a matter of fact, let me do ZAR to JPY. South African rand against the Japanese yen. And what we can see here is that this is the 4-hour chart. We've been seeing price, rally. And, it's been rallying for a while. If you look all the way down here, it's been on this tear to the upside. This pair is pretty easy to trade if you look at momentum and if you know what to look for. But yeah, this is the South African rand is a mining economy. So then, if we see gold prices go up, there's a possibility we'll see the South African rand benefit from that as well. Yeah, because there's gold mines in South Africa. That's one thing you have to understand. There's gold mines there, and I think a lot of those gold mines are still owned by the British. But
yeah, they're not as active, but just but due to that traditional relationship, we're seeing the South African rand in huge demand are being underpinned due to its relationship to gold. It's historic relationship to gold. Now it doesn't,
and other hard commodities too.
Yeah, exactly. So it's not, how can I put it? It doesn't mine as much gold as you would say Australia, or even hard metals, base metals. It doesn't mine as much as some of the other countries do. Like I think, of course, like I used to know this, but it's just a lot to remember. But yeah, like they're on the list as a gold, producer, but they're not high on the list. But because they have this traditional connection, their currency does, to gold. Since there's a lot of gold mines there, there's ancient gold mines there actually. But yeah, we're seeing the South African rand benefit from the move in gold as well. So then, that's what Melvin was pointing out to.
Yeah. So but yeah, I guess that's it.
Yeah, go back, and I was gonna say, yeah, we apologize. I know we've been pretty tired. Like we was pretty much up for most of the night. So then yeah, we definitely need to take a nap or a rest after this. But yeah, like yeah, markets are sort of, it's interesting. Like right now I'm seeing that we're going through sort of like a rotation right now as we move into the Wall Street time. Yeah, stocks have started to pick up now, which is good. But earlier we began to see it scale back. It pulled back drastically. But right now stocks are starting to pick up, U.S. stocks in particular. So then, yeah.
All right. So I guess we could close out today. I don't think there's any questions. No one has any suggestions on what currency pairs or assets to look at. Therefore, we could call it quits for this morning. I hope you guys got something out of today's session or learned something new. The purpose of these sessions is just to really help you guys start being more consistent with your trading. If you learn some of the concepts we teach and you get proficient at it, then you'll have a lot more consistency. You'll win more times than you lose. And you'll just see your account go up rather than stay flat or you blowing an account, because that could very well happen. Now, I know some of you guys are interested in getting funded. Just let us know. We definitely want to help you guys out if that's the case. And we could do one together. Hey, get funded. There's a lot of these remote prop firms out. A few of them are good. Some of them are shady. So you got to be leery of a lot of them. But this is the way to go right now, especially if you have limited capital and you want to do this full time. So then, yeah, we'll just touch on that later, especially for all of you members who have been with us for a while and such. But yeah, that's pretty much it, guys. Thank you guys so much for coming to today's session. And as we always say, remember to always count your blessings, not your pips. And yeah, have a wonderful rest of your day. Stay blessed, stay encouraged. Yeah. If you don't meet before the holidays, I know we have Easter or Resurrection Sunday coming up. So if you don't meet until then you guys have a wonderful rest of the holiday or wonderful weekend. and we'll definitely connect with you guys soon. We'll continue to send trade ideas to the group, so then just be on the lookout for that. But yeah, that's pretty much it. I don't think Marvin has anything he wants to share. I think we're good for now. And thanks. Blessings to you all. Talk to you guys later. All right. Have a wonderful rest of your day. All right. Okay, bye.